I like Netflix. Netflix is showing a good baseline. I'm going to pull up the chart, show you what I'm seeing, and tell you the reasons why I like Netflix. So let's get right to the chart. Let's see if I can blow it up nice and big. Whoa, that's super big. Okay, so here we go. Let's look at the 3-month chart first. Okay, just so we can see general direction. Oh man, general direction. It looks like poop. It was up here close to $500. We ended the year strong. And then let's remember, Netflix came out with earnings, Netflix sold off, and then what happened right in here at 345? It says 360, but I remember Netflix was 345. There's Bill Ackerman. Bill Ackerman, I forgot what capital he's from. Is he from like Pershing Square or Ford Capital or someplace in New York City where I used to live? So he's purchasing at 345. He purchased more at 375. They pushed the stock all the way up close to, what was it, oh my God, 460. Is that where it went up in February? 460. That is absolutely insane. I'm not telling you Netflix is going to 460. Now let's remember today, Netflix is currently at 373.47 and it had a tough day. So let's go to the 1-day chart. Here you go. Netflix is pushing 380. We're only at 373 now. Take advantage of this sell-off. People thought the market was going to tank just like it did on Thursday of this week. So the selling started around the same time. 3 o'clock. Oh my God, Netflix just dropped 2% like that. Oh, it's rebounding. Don't worry. It's rebounding. No, it dropped even further. It went to 368 and change. And at the end of day, what do you see? Huge support. Now, why do you see huge support? That's a great question. Now, the 10-year is going up, which makes stocks like Netflix, 4-letter, NASDAQ stocks more expensive. However, they're investing in big tech these days. When you're on Wall Street, a ton of money under management, you have to find the best of the best. And Netflix happens to be the best streaming stock. Disney, I also like. Roku, sidetrack, side seat. So Netflix is what I'm looking at. Let's bring that chart back up. There it is. Okay, so that was the 1-day chart. So yeah, I mean, if you could take advantage of something like this, and again, I'm going to assume when Monday comes around and this market opens and it's at 373, it might dip something like 370, 369. You know how stocks like to dip. Market opens, dip, oh, it recovered and now it's even higher. Or market opens, it's higher, now it's lower, and then it's back up just like that. So those are the opportunities for you to sell your calls, buy your calls, right? Sell your puts when it's down here and reload when it's up here, whatever your position is. But my position in Netflix is it's going up. So I'm going to tell you my price target. So this is the 1-day chart. If you were lucky enough to get in at 370, congratulations. That's what I'm going to shoot next week. So let's look at, again, 3-month chart, and then we'll go back down. 3-month chart. Netflix was almost $600 back then. Man, it's like half of that. No, it's probably like, what, 36% off? So again, Bill Ackerman was buying here. Bill Ackerman pushed it up 375. I think he stopped buying around 414, which would have been right around here. And it still pushed higher for 2 straight days. And then we had February and it sold off. And here we go. And all tech is going down and it was still 400. And then we went to 380 and I'm like, wow, I wonder if it'll go to 345 again. And then it's going down and now we're at 358. And I'm like, okay, seems to have found a base at 350. That's what I thought right around in here, you know, on that day, those 2 days. But no, it dropped even lower. So I showed you the rebound. When stocks rebound, they tend to rebound, fall a little more, and then finally sustain. And then you can consolidation. So let's go to the 1-month, Jack. All right, so the 1 month. Here we go. Here was that dip, bought up, again, dipped even lower, and then 1, 2, 4 straight inflow days to 380, which it touched on Friday. Now we're not at 380, we're at 373. What does that mean? Discount. All right, so here we go. So we got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, like 11 trading days, okay? So 11 trading days, and it has consolidated. It's actually a little lower here. So you can see drop, up a little, drop. Now remember how difficult the markets were. And then they pushed it up. Here's what I'm expecting to see again. They pushed it up to like 395 that day. And then what did we have? 3 straight outflow days. Now why? I've explained this to everybody. The first outflow day, 330. Institutions, they're getting rid of their positions that they do not want to carry into quarter number 2. So then what happens on the 31st? 31st, if you want to be in Netflix for the end of quarter 1, you want to add it on the last day. So again, it had an off day. It went down 5% on Thursday. The whole market took a dive at the end of the day. Let's remember that. So let's look at the 5-day chart real quick. There it is. End of day. then it rebounds, and then it sells off. But here we go now. Now we're starting the second quarter. So what do you see? Okay, well, they pushed it as high as 380. Maybe we thought we were going to have a strong tech day on Friday, right? 380, 380. Sell off, end of day. And I say that sell off is a sale. So now we go back to the 1 month. So let me tell you what to expect, because here's where it gets really juicy. And I'm going to have to go to the 3 month to show you how high it's going to go. 3 straight outflow days. So here's an inflow day. Here's an inflow day. 8 million. This is probably 5 million. Yeah, 5.8 million, 5.8 million, 6.9 million. So let's say an institution or a hedge fund or a bank decides they want to position Netflix quarter 2 going forward into next week, now that the market's stabilized. And I say the market's stabilized because the UVXY has gone down a little. So say institutions, hedge fund, anybody wants a big position, let's say. So Netflix is 373. A big position would probably be like, I guess 300,000 to 400,000 shares. You're buying 400,000 shares. That's going to be what? 12% of the day's activity. So if you buy 400,000 shares, you're going to have an inflow day probably around 6 million. So you can take a snapshot of this. The next inflow day, which could be Monday or Tuesday or Wednesday of next week. I don't care. I don't care what day it is, because I'm going to tell you which options I'm going to buy in a second. So here, in case Monday, Tuesday, Wednesday. Okay, let's just assume one of those days is an inflow day. Let's assume one of those days has a volume of 7 million. This stock is going to go up 4 or 5%. 4 or 5%. 373, 5% is about $16, 389. Now that's not even the best of it. It's going to 400 again, and it's going to 400 again, probably within 3 weeks. So here you go. Let me pull up my options plays, and I'm going to tell you exactly how I'm going to play Netflix, how I'm going to, in my opinion, play Netflix on Monday. Okay. So again, Netflix, I'm going to look at the April 22nd, because I have April 8th, 15th, 22nd, 3 full weeks to be correct about Netflix. Now, if I'm correct, Netflix could see maybe 393 next week. So I could sell my options for a profit as soon as it goes to 393. I don't necessarily have to wait for it to go up to 400, 405, 408, or wherever it might go, because tech will be strong. It's Facebook, which is Meta, Google, Alphabet, Amazon. All right, Amazon, 87% of the time in April, they have strong months. It's crazy. It's seasonal, I guess, but April is a big month for Amazon. So if Amazon's going to go up, other FANG stocks are going to go up as well. So again, I'm going to buy the 380s. Okay, that's the strike, 380, 21 days till expiration, April 22nd. And they're currently 1585 to 1725. So let's just say $16. But no, I'm not going to pay $16. I need a discount. And you remember how the markets like to open. Doesn't matter if it's Monday, Tuesday, Wednesday, Thursday, Friday. Market opens, stock goes up 5 points, then drops 10 points, then goes back up 5 points, and you're at the same starting point. It had a great volatility. So you want to put in cheap bids. If you're buying puts, look for 20% off. So I'm looking at $16. I say to myself, you know what? I'll pay about $13 for these. If I get them, great. So from $16, the midway price, $13, that's a $3 discount. That's about 18% discount. So that's how we plan ahead. You don't just pay, especially when they're expensive, $1,600 a contract. You don't pay $1,600. You know what? Give me the 18% discount. If I can get them for $1,300 and guaranteed, I have 3 weeks till expiration. If I am correct, and Netflix, let's just say, goes up to $395 at some point next week. $395, that's 20 points higher. Let's just see what this would be worth 20 points higher. It would be worth about $23 or $24. So if I'm buying one and I get it for $13 or $1,500, and I could sell it within a week for like $2,400, right? That's what, like 81% return. Who doesn't like 81%? I love 81%. If you like these videos, I'm shooting more videos every day about just one specific stock. So join me in my next video. Thank you.